Hello and welcome to the January 26th market overview. This is Mark, quantumforex.com. We are looking at our Euro USD, Pound USD, US Swiss, and US Yen as our majors, and we do have all the 4-hour charts up. However, you'll notice this time a little bit different. I already have some of the charts marked up, and the left side, dealing with the Euro USD and US Swiss, are more of the advanced charts. We have Stochastics, momentum oscillator. Then also have the pivot points that we have up, and weekly, monthly, daily pivot points also. And on the right side is more of a basic chart, and we're going to be talking today. The theme of today is really about triangles, and triangles typically show up in the second wave and the fourth wave, or the fourth wave. First, third, and fifth wave of an Elliott wave sequence is impulse, and the second and fourth wave are consolidations or retracement periods. ABC retracements, and then you have your rectangles and triangle consolidations. And we will see that today in our analysis, that we've got a number of different triangles that have been setting up. So with that in mind, let's start with the Pound USD. And I want to show you a triangle here. You can see it on the 4-hour. We're going to go down for a wave count. But you can see how we impulsed into a triangle, and then we impulsed out of the triangle, came back and retraced for a support level retest, and then moved up from there. There was two places to get in on this trade. And the first one, of course, the most obvious, is the break of the consolidation, showing that we're resuming impulse trend, and then a retrace back to where what was resistance is now support. There's another place to catch this, and that is when you do the wave count. You have wave A coming down, so you're impulsing in, wave A is down, and these typically, almost always, have 5 distinct waves. If they don't, then you probably don't want to trade them until the breakout. But if you can see 5 clean waves, then you can go ahead and catch this on the end of the 5th wave. And that gives you a really nice area to get in at. You've got an A, B, C, D, E, that's 5 waves. If you were to get in on this, your stop needs to go down behind the lowest point. Don't try to put it down just behind the support level of the triangle. Oftentimes, as you can see, there's a spike through, takes out some stops, and then continues. Go ahead and put your stop a good half of a candle, average candle width below your lowest point, which would be your A wave, and that gives you a nice safety area. If you go below that, then what you're typically going to find out is that this was not really a triangle. It was actually maybe an A and then a ABC, and then you're going to go for an extended C wave down, at which point you'll want to regroup and try to enter at the end of the C wave, maybe with some Fibonacci ratios on the last impulse, which at that point we'd call that X wave. But for what you can see here, this was actually an ABCDE 5-wave symmetrical triangle, and then we blasted out of it. You had one entry point at the end of E wave, stop down where I showed you, and then once you retrace, you retest that resistance, it becomes support, that becomes another place for an entry. And you can see how nicely this moved up. If you entered at that E wave right there, that was 250 pips of a move up. And of course, you would follow this. You would simply, once you retest and break this next high, your stop is moved from here to this point. So actually, let's just erase that and move our stop. Stop moves here. Then when you move up, consolidate, break the new high, stop moves up. Now this is a consolidation, impulse, consolidated, retrace, move back up. Your stop can excuse me, your stop can come up behind the low. Didn't really get any, this was just stair stepping up, so your stop would have stayed here. Then you get this retest, or I should say a consolidation, and then a break up above the high. So depending how you read that, you might leave your stop, or you could be moving your stop up here, and of course then it got blasted through and taken out. So if even if our stop stayed in this area, which is if you drop down, when you start seeing things go this much sideways and consolidating, we're on the hour. That dropped down to the 15-minute at that point and start moving my stop behind the 15-minute. But even here is 170 pips on that move. What was your stop loss if you got in at the B point around in this area? Your stop loss was about 20 pips for a 170. So you've got a really nice 1-to-8 risk reward ratio on that. And of course, if you were to drop down, say, to the 15-minute chart, then you've got this consolidation period moving up, and certainly at this point we cleared the previous high. Certainly your stop would have come behind there at that point. And then you can almost see a head and shoulders action here with a breakthrough, and in fact on Friday that happened at about 4:05. This action happened, I'm sorry, at 7:05 a.m. Eastern, 4:05 Pacific is when this action happened, this drop. There's no news releases. No news releases that were on the schedule that I could see, and we had this fantastic drop, and really that just happened out of really a head and a left shoulder, right shoulder pattern here. You can see how nice head and shoulders can play out, and then bam, we came down, retested. That was the ideal entry right at that point, and that is where we entered, picked up about 100 pips on that move, and that's about a 25 pip stop loss. And the first take profit before, as we started to retrace out of this, would have been somewhere between 117 and 97 pips. I think we got like 97 pips, I think is what we were able to get out of that trade. So now where are we at currently? Because this is the market overview, I did want to review this nice triangle pattern for those of you that I've been talking with and that are following more of the beginner course. Great triangle trade there, blasted out of that. Follow the stops behind, and you're able to get a good 150 to 200 pips out of that move up, and then right around retrace back down, following just simple support and resistance, head and shoulders, able to pick up another 100 pips. Where are we at now? Well, I'd be looking for coming back down into this support for some retracement. I'm really not looking to buy. If you did, you'd be doing it on a 5-minute chart or the maximum of 15. You'd be doing some scalping as we retraced back up. So if we get any kind of retrace, I'd expect a little farther move down. If you get a retrace that looks something like this, I'd be looking for a short at that point, and as you'll see, that's going to fall in line with the USD Swiss and the Euro also. So I'm personally looking for a retracement and to short anything. As we come to the daily, you can see we've really come to some top outs. Now if I pull in my momentum oscillator, and use period 10, you can see we have this nice divergence all the way down that has not been broken as we've continued up. So we really are in a position where we might be seeing some drops. Now of course we have a lot of support levels in here, and that's why I want to wait for a nice retrace to give myself a better risk reward. But if I can get a pop back up, I'd be willing to risk a little bit in here for the fantastic drop. Now other than that, you would have to, if you're longer term, you don't want to get down to lower time frames, you're going to have to wait for a break at least of the trend line and then a retest back up into trend line and resistance at that point. So you'd be looking, some people would want to wait and take something that looks more like this and then short at about that point down. So that's kind of the pattern we're looking for this week. Okay, let's move to the I'll cover the US yen here. Well, I guess I'll do that now, then I'll get into my more advanced charts in a bit. US yen, coming back to the weekly, remember that we had this triangle that we've broken out of, and I've been talking to you now for several weeks that we would expect a retracement eventually on this before we resume our move up, and indeed it looks like that's what we're getting now. Let's go with me down to the daily. What we look for in retracements is our last impulse move up. I would consider this wave 1, 2. All this would be wave 3. You can see wave 3 has to have 5 waves, and you can see wave 1, 2. So now we're talking this being wave 3. Has to have distinct 5 waves or it can't be a wave 3. That's a very fundamental rule. and I can see that right in here, and then a wave 5 impulse up. Let's go ahead and measure the Fibonacci. From a pullback from the end of wave 3 to the beginning of the wave 3, we like to see about a 127, 138% zone extension for our standard, and indeed we came right into that zone, 127, 138. So for those of you that have been submitting to me some of your information and your trade ideas, I recommended to anybody that was long on the US yen, when I saw this happen, I recommended at least bring your stops. Some people were up at this point around 700-800 pips. I recommended that you bring your stop at least up on the daily behind this support level. See, because we had this breakout, move up, retrace, consolidation, 1, 2, there's only 3 candles there, but that was enough for a consolidation off of this last impulse. And then when we broke above that, that gave us a higher low. I recommended, because we're nearing this 127, 138, bring your stop into this area. Now, of course, what that would have done, if you were up 700, 800 pips at here, you would have dropped back about 150 pips, gotten taken out with this impulse down, and you would have had about 650, 600 pips banked in your account. Now, if you're still holding that long, you're probably down around 500 pips or so by now on what you had was 800. Now, that's okay, but at this point you might be thinking, do I get out or do I hold it? Well, again, we have to go by not what we think the market's going to do, but what it's actually doing. So theoretically, I would have liked to have been out at this point here, and you can see how we had a little bit of a support struggle there. We did break, and then we plowed back down. So the question at this point is, where do we go from here? My recommendation, as far as what's happening, I believe we're in a wave 1, 2, that this is wave 3, and here's our 5 waves in wave 3, terminating at 127, 138% zone. Like I said, I expect a wave 4 retrace. Now, where we're currently at, if this was A, B, C, C wave has to have 5 waves. What I currently see is we've come into, from the total move from the top, if this was wave A, wave B, and wave C, notice how we've come again into that 127, 138% zone. And now look at, let me erase that, we've also tagged the 38%. Now in our retracements, we're looking for 38, 50, and 61% for an initial retracement. If this was an A leg down or a wave 1 down, 38, 50, or 61. So when we're playing, excuse me, when we're playing a reversal off of a 127, those are our initial targets. Okay. Now if we're playing a C wave impulse, we're also then looking for, from end of wave A to the beginning, we're looking for 127 and then 161, 178 extension. If it goes much beyond 178, we're typically looking at either a harmonic, bat, crab, or we're looking at this being a wave 3 and not a C wave. Now, and I cover that in my advanced course, but you're getting some of it here. Now, pretty clearly, I think we've got what we would call wave 1, 2, and then a wave 3, and we're looking for this wave 4 retracement. Now, yes, we have, could be A, B, and then we could be experiencing a C wave in here. That's also 2, and if that's the case, we've got we need 5 waves in a C wave. Wave 1, 2, 3 waves in wave 3. We need a 4 wave retracement. Otherwise, we've got wave 1 and 2, and then we've got a 3 wave, which needs to have 5 waves. 1, 2, 3 waves in the 3rd wave of the 3rd wave. Either way you cut it, this is a wave 4 retracement from how I calculate it. So wave 4s are not 5-wave impulses. At best, they're either consolidation, sideways, or they're ABC retraces. Typically, of course, you can have your downward channel that is a wave 4 that's just a rectangle channel down, which is a rectangle consolidation that's just going down instead of sideways. But clearly we're looking at more of an impulse move here. So I would expect this not to become a wave 3, and therefore A, B, B, wave C I would expect to terminate somewhere in this 161, 178. And what do we find? Right in the middle of that is the 50%. You can see that there. So 50% is a 38, 50, and 61 are what you look for in your retracements if it's an initial A wave, which it could be. We could be coming down for an A wave, move back up for a B wave, and then still be looking at a C wave that terminates even lower, but typically then that would be a wave 1 and then a wave 2 retrace, which again is possible, especially considering that we could have a lot higher to go. As we're looking at this monthly, we could still be seeing resistance level up in this area. So, however, I don't think that's the case, and let me show you. I think this is the top of the initial wave 3, beginning of wave 3, seen by the consolidation triangle. That typically happens in wave 4. I think this is a pretty clear indication we're starting wave 4 and moving up in wave 3. And we have this 127 is our initial target of a fifth wave extension. Now I can confidently tell you that fifth waves generally end at the 127. Look at the resistance level, actually 127 to 138% zone, which is going to be about like that. Notice the resistance levels. I can confidently tell you that, and I've just outlined it here too. 1, 2, 3, 4. I pull top of wave 3 to beginning, and I've got a termination right in here between the 127 and the 138% zone. We reverse out of it. Happens all the time like clockwork. The next one is the 161.8, which is way up here. That gives you an extended 5 wave, which we did not have that here. Okay, so back to what we're looking at. I'm expecting a turnaround, high probability around the 50%. If we retrace in an extended C wave, it's going to put us around the 61.8. So I would say those of you who are currently in this on a buy and you're holding this long term, you've got about a maximum of 223 pips. That should be on this because we had an extended 3 wave. That should be the limit of our retrace, I would imagine. But I'd expect 50% for sure. One reason being is that we have to see 5 waves in this C wave. And we could be seeing it here. This could be wave A, B, and then, I'm sorry, if this is A, this whole thing is A. B wave can't be an impulse. So really, I think this is an A, B, C right in here. And C wave just didn't break the top. That's going to be my guess because you got an A, B, C going up. So I suppose this could be wave A, B, and A, B, C could be the retrace. I just don't see that happening. And then this is 1, 2, 3, 4, 5. But I think if we bring in a momentum oscillator, we can see that the momentum is still going down. You know, an Elliott wave is somewhat of an art. It's art and science. But you can see here at the 4 hour, the impulse momentum is still going down. This seems to be a consolidation, and I would expect, let's drop down to the hourly. Yep, look at the triangle on the hourly. Sure, we've got momentum going up, but that tells you that this is actually a 4th wave. So I'd say wave 1, 2, 3, wave 4 sideways, and that 5th wave will probably then break and follow us down to this 198 or 101.00 level, at which point we would probably be looking a nice divergence on the hourly and be able to get in long, especially if you can on the 15-minute give a 1, 2, 3 setup qualifier. That might be a good point to go long again. Get +1, take out some profits, and just hold that and see if that's the end. We might end up by reversing completely out of the 50, and you can have a nice long ride up. If not, you should at the 50, once you get a little setup on the lower time frame, you should be able to ride that up at least, I would imagine, back up into resistance. You know, that's 180 pips, so I'd say at least 100 plus pips. That'll give you some profit, and you'll be able to come +1 on your trade. If it turns around and reverses and you head down to the 61, that's even better. You made some profit on the bounce, and then we can reposition for a buy down around the 61.8. So that's my view from there, and I think we've got some pretty good technicals to back that up. Whether I get short on this or not, what I'm really looking for is that buy on the around the 50 or the 61.8. I'm looking to get long, and that should be even from the 50. You know, that'll put us, here's our first take profit. If I scrunch the screen, I'm confident we'll get it down at least to the 101 level on this, and I might look to buy there, and you know, that's close to 1,000 pips. So a really good opportunity as we get down into the 50% and the 61.8% retracement. Let me draw those again for you. Here's the 50 and 61.8. Checked for a buy set up on the 15-minute chart at both of these levels to get long. I'd get long at both of them if I get my 1, 2, 3 set up on my 15-minute chart. Okay, we've got about 5 minutes left, so I want to move to the euro. I think there's a real good opportunity on the euro at open. That's why you're getting this a little bit early today. Look at this head and shoulders. Nice spike up to the monthly pivot. Now, if you don't use monthly pivots, daily, monthly, weekly, if you don't have this pivot system, it's an EA that goes on your charts and it highlights it for you. If you don't have that, email me. You've already got my email, Mark, M-A-R-K, at quantumforex.com. Email me, request that, say please send me the pivot point indicator. I'll go ahead and send that to you for free, just so that it help you out a bit, and so you can also follow along, because I will be showing these from time to time. They're, especially the monthly. When this happened early Friday morning, we came up in here and tagged the monthly pivot, and almost always you can just go ahead and get short or long at the monthly. You're going to get some form of retrace and be able to come +1 and take some profit, even if it continues back up through it. 80% of the time, it's a very good probability trade. Now, where we're currently at is we've had that spike up and we've come back down under this resistance level, and you can also see that's more of a trend line resistance, but you have this horizontal resistance also that's back in here. So as we go down to the hourly, I would expect this to bounce around, and actually there is, if you drop down to the 15-minute, you can see that there's actually, well, let's go all the way down to the 5-minute. Again, you can see there's a triangle development in here, and we have wave A. This is a little bit trickier. B, remember 5 waves is what we're looking for. They don't always have that, but if they're not, then it's not an actual symmetrical triangle. So you have A, B, C, D, and how this triangle would be is basically like this. Okay, so what are we looking for? A, B, C, D, and then we're looking for this move up into here. Wouldn't be surprised if it spikes up a little and tags this resistance, but somewhere between at open on Sunday and 136.88 is going to be a great opportunity to get short. Stops have to go above one of these most recent highs. You might want to put half your lots in with a stop here, half your lots in with a stop up here. If you're just going to do one stop, I go ahead and put it up at the high here, just in case you get a little bit of impulse, especially at the open on Sunday. You know, you've got all your traders coming into the market. This could fluctuate and give a little bit of a spike. But let's look where this is going. We've got daily pivot and weekly pivot. I would expect, look at the support level at the weekly pivot. Really very nice. And that's where I would expect to come down to. Probably get some initial support at daily, bump back up into resistance. So if you miss this and you get this video and we've already hit the daily, wait for a resistance, retrace back up into about 136.67, and then I'd look for a short after that. But if you can get in this initially, boy, you've got a really nice setup of 90 to 100 pips, ultimately down to that support level. And then I'd expect some bounce between these daily and weekly pivots a little bit. Now if we go down to our stochastics, we have the momentum oscillator, We have the momentum oscillator pointing straight down on the hourly, clearly a lot of momentum. We have the stochastics, and they're reaching for this 5, which is oversold. And not only do we have to hit the 5, but momentum has to turn up, and the stochastics have to hit and turn up before we're going to want to look at taking out profit. In the meantime, you'll just stagger your stop losses as you get this wave action down. Now, if you were to come down and hit the daily, if you want to play this on a scalping, take some lots off. If it retraces, take half your lots here. If it retraces back up into resistance, I'd enter again. By then I'm already +1 on my initial. I've got some profit out, and I enter another 50% that I did take out. I enter that again at this resistance level, and I look for that ride down. So that's kind of open on the euro. And then once we get through, if and when we get through these weekly level next week, then we'd want to take a look at ultimately where this might be going. We can peek at that real quick on the daily, and that would, from this point, down to our next support level is about 370 pips. So if we break the weekly and we get through that, break down this low and come back up, then you'd want to look for this next support level. And my estimation is that if we have moved as such and we break this low, and then we'd be looking for that retrace for a further drop. But there's just too much choppiness in here at this point, so that's why I brought these pivot points in. There's some really nice trades between these pivot points, and you can actually scalp in there based off of rejection candles off of the support and resistance of those pivot points. If you don't have those, go ahead and email me and I'll get them out to you. Now the Swiss is in a similar position. Notice the triangle, it's sitting above the pivot just like the euro is, but its triangle is impulsing the other direction. We're impulsing into a triangle, and very clear 5 waves. So as I said, this is kind of triangle. The theme of this market overview could kind of be about triangles, because this is my third one I'm pointing out here. So we have A, B, C, D. Now look at this E wave. I told you sometimes they spike a little. Look how we're spiking down below this, but it's not below this as of yet. So we have A, B, C, D. We're still above this area, and then we're dropping right back down to that monthly. If on Sunday at open we get a 15-minute or even an hourly rejection candle, that is a great trigger for a buy. And typically on these, this is probably we have to assume right now this is an A, and then this triangle is in B. Symmetrical triangles typically for your notes happen in wave 4. If they happen in wave 2, it's typically not a wave 2 but actually a B wave. So probably this is a B wave, and we're looking for an ABC retracement. And a good way to gauge this is AB equals CD. So typically you can count on C wave doing the same length at least as A wave, if not longer. So that's a good way to gauge that. And so let's say we took this off of a bounce and got back up above this, what was a support, and it does not become resistance. We close above that, then we should have a good 58 pips or so. Let's look at that on a higher time frame. Notice how close that is to the daily pivot. Okay, so I would expect this to run up very close into the daily pivot, and then I'd want to look to take profit off around there. So possibly a 70 to 80 pip run even after spread on that trade. And of course the euro is a little bit more, about 100 pips, and that's about normal. Swiss moves slightly less than the euro. So okay, well that's it for the market overview. What I see there, I think there's very easily a few hundred pips that we can see right off the bat. At least 100 pips on the euro, 80 some pips on the Swiss, and then this yen, if and when this week, which I think we will get there this week, if we retrace back up into this 23, by all means short again. look for taking profit around the 50. I'd look to get long at the 50 or the 61.8, maybe both. If we get that 15-minute 1, 2, 3 setup, we break that lower high, get that 50% at least retracement, and then we're looking for a buy. And we've got really good 1,000 pips off of either of these levels to hit that higher 127%. Let's pull in the monthly here. That higher 127% up in here. So, you can go with 100 pip stop loss if you need it, and you're still at 1 to 9, 1 to 10 risk reward. So you've got a really good setup on this. And then, of course, when we get up in these resistance, we're going to be looking for that 1, 2, 3, 4, 5 waves. Then we look for ABC retrace, and there's going to be some great shorting opportunities around that time. And it should be fun to see what the fundamentals news and all that happens when we get to the end of our 5-wave Elliott and we start finding out the adjustments fundamentally in the market, and which lineup will more than likely then line up with our Elliott wave end. Okay, that's it. We've been gone a little bit long today. I'm getting this to you guys early. God bless you, and make sure to email me, mark@quantumforex.com, any questions, or if you want that pivot indicator. God bless.